But let's do this. Let's talk about what's the trading tip of the week.
This one is brought to you by a great dear friend of mine. Kudos to Sharisha. We were having a stock club call last week, and she dropped a gem that was incredibly important for those of you that are working or let's say you're running the business. Take 3 months that is your least busy time of the year and only trade those 3 months. I think too often as traders, we think about every trade we can take all year opposed to trading inside of a season and maximizing your trades there to get highest return on health, return on capital, and to eliminate drawdown. So, like even in the summertime, when the market is normally falling apart, what we talked about it at the mastermind, that 523 point target worked pretty well today for the Dow. But you have a bunch of those moments in the summertime. I think it's a better use of your time to take 3 to 4 months to trade and say after these 3 or 4 months, my season is concluded, opposed to trying to trade year round and ending up with a lower return on investment and a horrible use of time. Doesn't mean you shouldn't practice
Mhm.
in your off season, but I think truncating your trading season to 3 or 4 months is a hell of a way to get a lot of gain out of the market.
Here's the interesting thing. What if we had to take 3 months? We know historically from April that 3 month period starting in April usually is the best time to trade, or
Yeah.
do we say we wait till September, October when we know there's volatility in the markets? Do we go there or right like
Me personally, if I had to only pick three, I do September, October, and November. Easy
when
money.
it get it on the low?
Maybe in the second week of December, add some, but also too that summertime right before Investfest, whoo, baby, it's always a great move there. But if I have to pick, I would pick fourth quarter and then take 50% of the capital, put it into long term, and you'll be good. I think traders don't think or don't track what weeks and what months do you normally do the best in, and what's your how high is your profit factor, and what's your highest return on investment season, and just trade all year, and then you end up being burned out from trading.
Yeah, there is a burnout. There's a burnout phase,
Yeah.
um, which is it's unfortunate. But I think that goes part into that. Like we've said that over and over. Is like make sure you have a plan. Just make
Yeah.
sure you have a plan. Whatever it is, don't have to be a plan that we suggested. Just have one because once you have it, you'll start to notice. And I'm glad we talked about it last week. Is that
Mhm.
lack of discipline, right? You can always go back to your notes and say, "Wait, I said I was doing this. How did
Yeah,
I
and I
get to
deviated.
here? How did I get
Mhm.
here?"
Mhm. And it's usually looking at someone else's performance or portfolio, and now you end up chasing something. And it's like, well, even if you see it on Twitter or IG, you don't know what losses they have in another portfolio. So 24 trades in a year is good if you have a big size target, or even if you do 24 intraday trades and 12 swings or six swing trades. You should be
Yeah.
good. Because if not, you're scalping. But if you're going for sizable targets, 500 plus points on the futures market, you shouldn't need 90 trades on the year.
Yeah, and that type of aggression, we had a friend of ours who was trying to open up a brokerage account, and because he said that he was going to be aggressive, they didn't allow him to trade derivatives. He wasn't allowed to trade options or futures, and he
Mm-hmm.
was like, "What happened?" I'm like, "What'd you put down on the selections when you were trying to open the brokerage account?"
Yeah,
And then we
we was
went
the
over
level
it.
three.
I think he
Mm-hmm.
said aggressive income, and once he said aggressive income, they were like, "Uh-uh." So you had to call them and spend 4 hours on them, and then they finally opened it. But yeah, you just got to be mindful of all that.
Because you're the liability on the asset sheet for the customer list. Less is more. Less is
Yeah,
definitely more.
they know potentially you're going to be using margin and it's going to be a whole mess.
Yeah.
For sure. And speaking of that, Investfest, get your tickets. Last year, we partnered with the good brother Paul Judge,
Mm-hmm.
and he, if you don't know who Paul Judge is, he just made the Forbes top 100 list. He's doing his thing.
Incredible.
A VC legend in Atlanta. He's one of these people that has been responsible for bringing multiple companies to $100 million valuations and more. Um,
Mm-hmm.
so last year we handed over the realms of the pitch competition to him, and it was the first year that we had it. It was focused on tech companies, and the result was it was $125,000 pitch competition. He actually picked two winners. We had Jalen Brown, we had Angela Simmons, we had Two Chains, we had him as the judges. and he actually picked two winners and gave $250,000 away to 125,000 to two different entrepreneurs live on stage. So man, that's pretty monumental if you really think about it. So we running that back. We running that back, but we starting early. One of the biggest complaints that the team had was that they didn't have enough time to really go through all of the things like how they really wanted to. Like people wait to the last minute to do everything.
Mm-hmm.
So if you're interested, this year we starting early.
Mm.
The deadline is April 10th. That
Oh
means
wow.
after April 10th, you will not be able to submit for the pitch competition. In my brain, I would do it now.
Mm-hmm.
Right?
Tonight.
Yes. All you have to
Yeah.
do all you gotta do is have an Investfest ticket, and you go to the Investfest website. There's a tab on the website, and all the information is there. You submit. It is a detailed process, but that's to ensure that you're a serious person. It's $125,000. Yes, vendors can apply as well, and it's a tech. You have to have a tech component to your business.
Mm.
So I don't know why you would not do that, especially if you're already going to InvestFest. But even if you're not, I mean, I think it's a great opportunity. Um, and like I said, I mean, you saw it happen on stage last year. Two people won $250,000. So
Great
take
audience to be in
advantage.
front of too. Yep.
Yeah. Oh, 100%. Take advantage. Deadline is April 10th. That means I would start tonight. Go to investfest.com, fill out the application. The ball's in your court, man.
Yeah.
What more can we do?
That's
All right.
2 months of leeway. That's
For
more than
sure.
enough.
And I don't know if you
Early
guys know, capital is not flying around for entrepreneurs.
It's really not. And now they're making it even harder. They're making it even harder. The
For
administration,
sure.
like it was always difficult to get money. It's even
Mm-hmm.
harder to get money now. So that's one of the reasons why we did it. And like I said, I mean, we actually handed over the reins because he actually does this all the time.
Yeah.
And he's somebody that actually invests in companies, and he's somebody that actually has a proven track record. So, I mean, you let the experts do what the experts do. So, man, I think this is a tremendous opportunity for anybody that's interested. And hey, don't say we didn't try.
We're
Yeah.
gonna do
I
it
mean,
again.
even with Black History, it wasn't even as many mentions of Black history, and of course, like commercially, they couldn't, right? But even that is down. So you have to know funding is down. And once again, tune into the episode Thursday because the new game is to then help you raise the valuation and on the back end take all the money away from you. It's a dirty game. Please be mindful.
Yeah. Be mindful of that. Be mindful who you're going into business with. Be mindful of who you're selling to, if you do. But be mindful of where you're getting the money from, right? Because a lot of times the money comes with equity. It's a dirty game that we're trying to pull back the layers on as we learn it. But there are seasoned vets inside of it that are taking advantage. So, man, this is an opportunity of a lifetime.
And then the last minute I'll say is it doesn't have to be even a successful running company. It could be a company that you literally just started. It's the idea. He said that last year. He's willing to invest in a company off of an idea. Now it
That's
has to be a little
beautiful.
bit more. It has to be a little bit more than just an idea on paper. Like have a website, but it does not have to be a company that is up and running. That's important. It does not have to be an up and running company. It does not have to be a company that already has revenue, that already has employees. It can be at the very starter level. It could be a company at the very base level. So, because I know that's a question. And then the last thing before we get back to regularly scheduled programs, somebody said, "What can I expect to learn at InvestFest? Is it about learning anything, or is it just about socializing?" Well, you're there for 3 days. I think you're gonna learn. You're gonna have the opportunity to
A
learn
ton.
everything: real estate, credit, AI, investing, and of course you'll be able to network. So what do you expect to learn? Whatever you're interested in learning. And as far as the networking, yeah, that's kind of obvious. If you're around 25,000 people, you should be able to network pretty
Yeah.
efficiently. And Black Tie Affair this year for VIP night. Okay.
Please.
Now, having said that, what is the
Wait.
risk?
Really quick. Back to the funding part. What percentage of the business do they have to give up if they win the prize?
Uh, what is it like? It's under 10%. I know that.
Yeah.
I don't
which
want to
is a
say
Okay.
it.
still
Yeah,
because most
it's under,
people are giving up 25 to 40% of their company
Oh no, no,
for
no, no.
less.
and
Hmm.
mind you, most of these businesses don't even have revenue. So you
Hmm.
value a business based off of multiples of your revenue. A lot of these businesses have never even generated any money. So technically, the business is a hypothetical valuation anyway.
Hmm.
So yeah, I mean it's a less than 10% stake.
Which is a
And like I
steal.
said, that's for most businesses that's not even haven't even made $100,000.
Hmm. And to have him as a partner too, and that
And it's a
net worth.
mentorship too. Exactly. That's a good thing too. It's not just about, it's like Shark Tank. It's not just about, okay, he's gonna give you money to invest in your business. The guy's extremely wealthy person. And
Hmm.
he's actually led companies to $100 million valuations. So it's not like they just invest in you, like they actually become your business partner now as well.
Hmm.
So it's a mentorship, it's resources, it's not just like, okay, here's a check and then try to figure it out. He has a vested interest in it because he's now your partner.
Yeah.
So and like I said, this is something that he's actually done. He's in Forbes. Look him up.
Yeah,
Um,
and
oh,
they had
go
him in the Forbes 50 innovators.
Hmm.
He's in there. I mean, and there's some faces that you might recognize as well, but he's definitely in there for sure.
Absolutely.
yeah,
Yeah.
for sure.